37% in 45 minutes. How I managed CPI volatility. Trade recap at 6:45 a.m. Pacific. With CPI volatility still settling, SPX was trading at 6,771, modestly below the 6:30 a.m. open of 6,778. At the open, I was referencing Edgeful's Inside Bars report. The 6:30 a.m. Pacific opening price was inside the prior day's New York session range, a condition that historically sets up the potential for either a breakout or a breakdown. Over the last 6 months, when ES, a proxy for SPX, has opened inside the prior day's range, it has broken out 61 out of 73 times, roughly 83% of the time. That statistical context, combined with relatively tame CPI data, had me leaning bullish, while still actively managing risk using MES futures. At 6:45 a.m. Pacific on December 18, 2025, I publicly posted on X, long 5 XSP 676 calls at $2.75. 3 minutes later at 6:48 a.m., I posted short 2 MES. 1 minute after that, as SPX dipped roughly 4 points to the 6,771 area, I added to the hedge and posted short 6 MES at 6:49 a.m. Pacific. At that point, I was fully hedged, consistent with my plan B, and prepared for a move lower. Active hedge management. My plan was to reduce the hedge 1 contract at a time if price recovered, so that I would only be net short 2 MES contracts if momentum turned higher, which it did almost immediately. At 6:54 a.m., with SPX moving quickly towards 6,780, I posted, stopped out on 4 MES, $40, 2 short remaining. These exits occurred rapidly before the post due to the speed of the move. At that point, I was effectively long 5 XSP calls, short 2 MES. SPX then rallied from a low near 6,766 to 6,786, a move of roughly 20 points. At 6:55 a.m., I posted, XSP calls in the money now. Calls at the bottom of the screenshot, MES at the top. In that snapshot, the 5 calls were up $357.50. The MES hedge was down $182.50, plus a realized $40 loss on MES. Second hedge adjustment and final exit. As price pulled back to around 6,777, I re-added protection and posted short 4 MES at 7:11 a.m. Pacific. At 7:25 a.m., with SPX back near 6,793, I posted, stopped on 2 MES, $80, 2 short remaining, calls are back in the money. Then at 7:29 a.m., as SPX broke above the initial 30-minute balance, another reference from Edgeful's reports, I closed the 0 DTE calls and posted, closing out the 0 DTE for net plus $738. Final P&L breakdown, intraday only. Calls plus $967.50. Futures hedge minus $228.75. Realized futures losses minus $40 and minus $80. Total futures losses $348. Net intraday result $967.50 minus $348 equals $619.50. Using $1,675 of intraday capital, the trade produced a net profit of $619 in about 45 minutes, roughly a 37% return on capital used. This 25,000 challenge account is a high-transparency, educational trading account created to openly document my process. Every trade and strategy posted live with screenshots, time-stamped, never after the fact. Follow Frank Trades on X